She is a residential loan officer with Associated Bank. Please listen and learn, and type your comments and questions on the side as you feel motivated to do so. And please welcome Ms. Deborah.
Hello. Hi, everyone. So yes, tonight, whatever questions that you have, please, you either talk or type them into the comment, and I'd be more than happy to answer them all for you. We'll discuss credit, what you need to do to qualify for a mortgage, about employment, savings, and down payment assistance that is available, grants, and so on and so forth for first-time home buyers.
Good stuff. Hey, Ms. Deborah, how you doing?
Fine, Don. How are you?
Good, good. Hey, quick question for you.
Yes.
So as a first-time home buyer, of course, you know, you have so many fears, you have so many, so much, hesitation is concerned. What would you say a good amount of money to have saved is? Because I know a lot of us are looking for like, okay, grants here and grants there, but worst case scenario, what's just a good amount of money just to have saved for your first time purchase?
Between 4,000, around 4,000 to 5,000. Now, you might not need all that money, but out of pocket right away, you're going to have to pay for a home inspection. You can't finance that. That's not part of the mortgage. So home inspections are between 300 and 500 and above, depending what type of property you purchase. So you need the money for that. We also need money for closing costs, unless there's ways that we could have the seller pay your closing costs, which Nicole will explain how that works. So I'd say between 4,000 and 5,000 in the bank, or we can also have a gift. If you have a family member who wants to give you a gift funds, then we can accept gifts also. So you might not have it in the bank. Whatever you do, no large deposits. Don't, if you have cash saved at home, we'll discuss that. Don't just drop the money in the bank, because there's no way to verify cash saved at home.
Got you. Thank you so much.
Mm-hmm.
And Ms. Deborah, if you would like to go
Yes.
ahead and expound on what you do, I think that's appropriate.
Okay, so I take the first-time home buyer, tell them what documents that you need, which are 2 years tax returns along with your W-2s. If you're self-employed, we need to show that you've been self-employed for 2 years, because we have to average the income. We need 30 days of paycheck stubs, current paycheck stubs. We need 2 months of bank statements and all the pages. I know sometimes people get angry because I tell them, you only sent me 1 page, and it'll say 1 through 5. I need all of the pages of the bank statements, regardless if they're blank. We need a picture ID, and then depending what your income is, if you get Social Security income, we need the award letter. If you have other income coming in, whatever income that you have, say you have child support, we have to show that that income is going to continue for 3 years in order to use that income. So if you have child support and your child's 16 and you know it's going to stop when they graduate, we cannot use child support. So that's a big thing. We can't use it if we can't verify for 3 more years to continue. And also we have to show that you've been receiving it for 6 months in order to use child support. We do a credit. Well, usually when I get the buyer, I like to have a soft credit pull done. So the difference between a soft credit pull and the hard credit pull, if you go around shopping for mortgages and who has the best rate or down payment assistance, every time that person, that loan officer runs your credit, it has a ding to your credit report and your score is going to drop. You don't need to, if you know what your credit score is and you call around just to find out what they have to offer, don't ever give your credit, your Social Security number. They don't need your Social Security number to get quote to you. If you say I have a 640 credit score, right away they can tell you what you can qualify at. Your income, you can tell them. No one needs to run your credit. As far as money in the bank, like I said, you do not, if you have cash at home, do not make large deposits because we can't verify cash and we're going to ask where it came from. If you have money saved at home and you're going to use it, you could always give it to a family member. We can give you a gift letter. They can sign the gift letter that they gave you this money, and then they can give you it in a check and deposit it into your account. Like I said, cash, we can't source where cash came from. We look for 2 years job stability as far as qualifying. And because of COVID, I know that people have changed their occupation. As long as we can show that there's some kind of 2 year stability, or sometimes there's not, I can go back to show, yes, they used to work in 18 and 17 because of the pandemic in the hospitality industry. Now you're in a new industry. As long as we can show a paper trail and write good letters, we'll be able to get you a mortgage.
Yeah, I was gonna ask that question because I know, like, let's create a scenario. Like, I think COVID hit in like what, 2020?
Correct.
So COVID hit in 2020, 2021, 2022, or 19, 2021, 2022. People wasn't working because of a number of different things.
Right.
Say if it's 2022, you have a job with good income and you have a decent credit score, and you cross all the T's and dot all the I's. Do you still have a chance? That was my question.
Well, if there was a gap and you were collecting unemployment, we're not going to use that unemployment as far as the income. The only time we use unemployment income to help you qualify is if you're a seasonal worker. So if you work construction outside or landscaping, and we can document for the last 2 years you've been getting unemployment, we can use unemployment to help you qualify. But because of the pandemic, no, we don't use the unemployment, but we will allow, we'll look at what the situation was and what kind of job you have now, and we'll take this job. We're not going to average.
Got you.
As long as it's not self-employed. But if you're self-employed, like I said, most self-employed, at least with the banks and brokers, probably with your firm, you'll be able to help them. But Fannie Mae, Freddie Mac, FHA, you have to be 2 years self-employed in order to use that income.
Okay. Got you. I did have 2 questions, but I'm gonna let somebody else ask a question, then I'll jump back in. Anybody?
Okay.
Yes, Miss Deborah, I have a question from Miss Peters. She said, does Miss excuse me if I'm saying it wrong, Scalager loan to co-ops, pros and cons of co-ops?
Okay, so no, Associated Bank does not do co-ops. I know Citibank does co-ops. Co-ops are, you don't own the property on a co-op. So they're almost like condos, but condos they have a condo association. We do not do co-ops. They have a lot of co-ops in New York. They have some here, like Evanston has co-ops. I know we do not do co-ops.
What is a co-op?
The co-op is you only own, like on a condo, you own the inside. On a co-op, you don't own the property. You're like leasing it on a co-op.
Gotcha.
They're hard to finance, and you can't get them with 3% down payment or 5%. A lot of the lenders that do them want 10% or more down.
So Miss Mathis also said, if you get a gift from a family member and deposit the check into the account, you can't pull the money out. Is that true, Miss Deborah?
Pull the money out of your bank account that they gave to you?
I believe that's what she's saying.
Okay, so here's the thing. We're going to verify that whatever amount of money that we need. Well, here's how we do it. Let's say you gave me your 2 months bank statements and you were short money. And I said, okay, you're short. Can you get a gift from a family member for $1,000? What I do, honestly, because a lot of times you gave me those bank statements, How do I know? What if you took that money out to pay bills and that bank statement, I only need $1,000. That's why you're getting the gift letter. What I usually do is tell them to make that gift check payable to the title company where you're going to close. And this is on when we already have a signed contract. I don't need the money in the bank before that. When you have a signed contract. And the reason I tell them bring it to the title company and make it payable to the title company, because we will accept that. Now, this is conventional mortgages. FHA is much stricter. This is conventional. I just need to see a copy of that check that is made payable to the title company, and I need the gift letter. That's it. We don't source on conventional where the money came from. So I don't need, say it's your parent, I don't need their bank statement, not on a conventional loan. And the reason I say make it payable to the title company, because what happens if you had transactions, you gave me January's statement, your bank statement for January. Now we're into February and I say, okay, deposit it. Well, February statement hasn't come out. So you're going to ask the bank for a transaction history. They're going to have to sign and date it. Now your balance, even with that $1,000, is less than the January statement. Now you're going to be short more. Just a trick of the trade. That's why I say, this is what I need. This is what you're short. Bring it to the closing. And make it payable to the title company. So then I don't have to touch the bank statements that you have in the file already. And who cares how much you have in there? I've already verified.
Thank you for that. I also have Mr. Washington. He said, hey, what about a 203K loan?
Okay, so 203Ks are FHA rehab loans. My bank does not do the FHA rehab loans, but 203K are rehab loans. So you buy a property and you need to do some rehab work. That's what the 203K is, but you have to have a contractors and it gets paid out, whatever the amount of the rehab money. They're very detailed. It gets paid out in phases as each phase is done through the title company. They hold that money in escrow. You still have to make that mortgage payment for the total amount. So say the house is 100, but you want 20,000. Now you're getting a mortgage for 120. You still have to make the mortgage payment, even if you're not living in the house, on the total amount that they gave you for the rehab.
Oh, wait, quick question. I gotta jump ahead of that.
Okay.
Wait, so can you ask for them to start where you can start making payments to the bank once the whole project is done, or as soon as they start dropping that first draw of money, your mortgage is due every month?
You'd have to see if the lender will do it. Like if the house is uninhabitable, you
Yeah.
can see. You'd have to see if the lender can do it.
Okay, got you. And I want to ask another question too that I know like some of the followers want to know. What do you think about so say if you have one person, because I know a lot of people try to partner their situations together.
No.
That's a no-no. Don't do it.
Yes, because like you're gonna buy a house with your boyfriend for a year and then you break up. And then you're fighting. Well, I own the house. No, I own the house. Well, I put more. Good luck. Because you both you're either going to have to buy that person out. And if you put minimum down, there's no equity. So how are you going to buy them out?
Got you.
To refinance. And the only way to get a person off of the mortgage, the only way, you have to refinance that house. So even if you paid them off, okay, even if you paid them off, if you don't refinance, you could screw up their credit if you don't pay on time, or they could screw up yours if you moved out. Yes, very, very dangerous to do it that way.
Got you. And that's
do it on your own. Do it on your own. There's grants. Save every little bit. Negotiate when you buy the house for the seller to pay closing costs, but don't ask anybody to sign for you.
Yeah. And I want to say that because I know a lot of boyfriend, girlfriend, they want to move in together and be
we're in love,
paradise and all that. But the only thing I would suggest, if you do something like that, if it's like a mom and daughter, you all been living together you've been renting together for like 15 years. What the heck? You might as well get a mortgage if this is a lifestyle for you all where you all live together is beneficial for each other. But other than that, I can see it.
No,
Um,
it wouldn't work. When I bought my first house, I was 23, and I bought it with my mother because she rented and I rented somewhere else. And I was like, this is crazy. We're paying somebody else's mortgage. I'm renting, you're renting. So we bought a single family house with an in-law apartment. I lived upstairs in the in-law, and my mom and sisters and brother lived on the first floor. We owned that house for 5 years. When we sold that house, we made $50,000 on it. So it was a great investment because that was over 30 years ago. But yeah,
wow,
yeah.
wow. And you know what? That's
But
one
it's
thing that we
apparent. It's apparent. You know
yeah,
what I mean?
yeah,
Yeah. If you can do it on your own, do it on your own.
got you. Anybody else? I don't want to hog everything. And Miss Deborah has a wealth of information.
Yes, so I have a question from Ms. Gilmore. She
Mhm.
said, Ms. Deborah, I've been employed for 14.7 with my job. They are phasing my D part out. I will be getting a severance package.
Oh, severance package. Okay.
Yeah.
We won't, severance, no, because we send a verification of employment, and the severance package will only be for like a year or so. How can we verify that your employment is going to continue? It's not. So honestly, if you want to buy the house, take the severance package and go get a job right away. Just get a job, any job that you need the amount, because you're still going to get the severance. You can work on that severance. So just go get a job so you can qualify for the house. Then whatever you want to do after you close, we don't care. I don't know, but do it to qualify. And don't wait. Interest rates are going up. They've been going up. They're going in anticipation of the Fed raising the rate next month. So rates have already gone up. It's not like they're going to go up next month. They've already done it.
Hey, Miss
So-
Deborah, I'm sorry. Can you please reintroduce yourself and give some facts about who you are and what you do? We have someone that just came on late that's asking for a reintroduction.
Really?
Yeah.
Okay. I'm a loan officer. I've been in the business for over 40 years. I work for Associated Bank. Not most, at least 99% of my clients are first-time home buyers, low to moderate income, all minority. We have grants. The bank I work for, we have free money, down payment assistance, grants, plus we're whatever other grants that are available. If it works for us and the bank, we send it to the legal department, we can layer any grants that are available. We have a great first-time home buyer program, conventional program with 3% down, no PMI insurance, which PMI insurance is if you don't have a 20% down payment. On conventional mortgages, you would have to pay this insurance that protects the bank in case you defaulted and went into foreclosure. The PMI company will continue to make the mortgage payments. This program, no PMI insurance and 3% down. We have down, like I said, we have $4,000 down payment assistance, and we have closing cost assistance. Plus, since we're a bank, we don't have all those junk fees for closing costs at all. Our closing costs are very low. We do FHA, we do VA. Really, I don't like to do a lot of FHA because FHA is very tough when it comes to appraisals. So FHA has certain guidelines, and a lot of properties would call for a lot more repairs if you bought FHA as opposed to conventional. And the difference here, FHA requires 3.5% down payment, conventional 3% down only. Also, FHA is good if you filed a bankruptcy in the last 4 years. If it's only been discharged less than 4 years, FHA is good. If it's over 4 years, then you can go conventional, because conventional will not accept anybody who filed a bankruptcy less than 4 years.
Quick question for you,
Mhm.
Ms. Deborah.
Yes.
And as a first-time home buyer, some people, they don't know what they don't know. What's your advice to position ourselves to have more buying power as a first-time home buyer? And how What does that look like?
So honestly, do a soft pull, apply to, come and see you guys, fill out whatever paperwork that you have, go to the non-for-profit and have a soft credit pull done, soft credit pull. Don't let anybody do a hard pull. Get the soft credit pull. Then we could evaluate the soft credit pull, and I could tell you, because there's lots of tricks that I know for being in this business a long time. That's all legal, because I'm never going to do anything that's illegal. It's all legal, but it can set you up. So you'll be able to buy, maybe not this month, but maybe next month or 3 months or 6 months down the road. So the credit tells all. And honestly, with the money, you can save the money. You can get the money through grants. Maybe your family will give you the money. I wouldn't worry so much about the money. It's about your credit. That's what I would worry about. Let's look at your credit, and then we can work on everything else. And have a job. You have to have a job.
Gotcha.
We've got some more questions over here. Do you look at specific things on the credit report, or are you just looking at the score?
No, we don't just look at the score, because we look at if you have any late payments, 30 days, 60 day, 90 day. So on late payments, even if you have a high score, if you have late payments more than 2 creditors late, like 30 or 60 days, certain programs will not accept late payments. Sometimes you can go back to the creditor and tell them some story that might be true. If you know that you can't make the payment, I would call whatever creditor and tell them, listen, I have a problem this month or whatever, and they will work with you. Don't let it go on your credit for a 30-day late at all, especially if you're trying to purchase a home.
Thank you. We've got Ms. Miller. She has her hand raised. Ms. Miller, go right ahead.
Hello? Can you guys hear me?
I'm sorry. Yes.
Yes, we can hear you.
Okay, I think that was my wife who did this for me.
I'm sorry.
No, it's okay. So I have the job 7 years. I have the W-2s, the income.
Okay.
I was told that my credit score is like a 592. So
Well, who told you that? And if you looked at Credit Karma and Capital One, though, Credit Karma, Capital One, all of those through the credit companies, that is not what we use. We use the FICO score. So that's why when you go to the non-for-profit and they do the soft pull, what they pull is what we look at. So what they tell you is totally different, because when I look at Capital One and they tell me what my score is, I laugh, because when I have the soft credit pull done, it's much higher than what Capital One says it is.
Correct. Because, yeah, I had tried to get a car. It was like 500 and at the dealership. And then this guy had a realtor, he was saying it was 592. So, so do I go to the bank and have them do a soft pull, and then they will let me know the things I have to do?
You can talk to the people here, Don and his staff, and they can set you up to go to the non-for-profit and have the non-for-profit do the soft pull. Then we can advise you. I can look at that credit report if you authorize it, and I can tell you what you need to do. There's a lot of things you could do to boost your credit score.
Okay.
Just don't be added. People think if you get added onto someone's account as an authorized user, that it's good for your credit. Here's the thing. First of all, an authorized user, you are just authorized to use that person's credit card, to talk on their behalf and to use that card. You're not responsible for those payments. So that's really not your card. And it states right on the credit report, authorized user. If somebody wants to help you and they want to put you on their credit card, my advice is, first of all, see what the limit is and what they owe. Because I had somebody who said, oh yes, my sister's going to add me onto her credit card. I said, okay, make sure that she doesn't owe to what the limit is. Her limit was 500. I said, make sure she owes hardly anything. Well, he got it added on. The limit was 500. She owed 485. What do you think that did to his score?
It dropped it.
It dropped it even
Yeah.
more. Yes, yes.
Yeah.
So if a family member, someone says, here, I'm gonna add you on as a co-owner on their credit card, that can boost your score sky high. But you have to see what you're approved at and what you owe.
Yeah.
So if I have one more question, can I ask? Actually, so me and my wife, like I have the job and the income. She has the credit. So like, can we like combine together? Like she has the credit and she has like the finance part of the savings, in the account of you needed to have a down payment of 4,000 or 5,000. She have that part. Like, can we just combine together and get the house or get a loan?
Well, they're going to look at your score. We look at both scores.
And I think she's about a 680. I think.
Well,
Yeah.
hers is good. That's good because at
But
640 and above, at least a 640, you can get grant funds. But let's really honestly look at your credit and see why it's low, because they're not gonna let you go on the mortgage because of your credit score. You won't qualify. But maybe you can get added onto her credit cards to boost your score.
I'm already on there, and she have a bankruptcy, but it's over in June. Discharge.
For how many? So it's
Um,
going on now?
Yeah, she did a chapter
13?
No, 7.
Okay, so chapter 7, because the only one that is a 13, and you'd have to get approval from the court to purchase a property because that's a repayment. So a chapter 7, it has to be discharged for 2 years to go FHA. So
yeah,
if
the
it
2
hasn't
years
been,
to be over with in June. Yeah.
okay, so then come June,
Yes.
she can buy FHA.
Cool.
Yep. But let's look at your credit and find out why it is where it is.
Yeah, I would do that. Okay.
And here's another thing too on credit. Sometimes when you go to the housing counselors and they to do that home buying education class, because you need to get a home buying certificate for any free grant funds, any of the grant money that's out there, plus any of the first time home buyer class programs. Do not pay off if you have collections, do not pay them off. Because what happens is when you pay off a collection, it dings the credit. It doesn't know that you paid it off. It dings the credit as if you just got another collection. So it drops your score. So never pay off a collection, and don't go into a payment plan with a collection unless you applied and the mortgage company told you to do it. Like the loan required, okay, we'll accept it as long as you have a payment plan, because you might owe $5,000 or $6,000 depending who the collection is with. But don't go on any payment plans, because what happens is each month they don't say that you're on a payment plan. That creditor, they keep marking you as being late, and that collection is open. So I wouldn't go on any payment plan. Plus, I wouldn't pay anything off. Let the loan officer tell you what you should do.
Thank you so much, Ms. Deborah, for all of that great information. We do have some other questions here from TK. What about student loans? Do student loans affect it anyway?
Okay, that's a good question, because that is a really big one. So student loans. So here's how we qualify on student loans. Hopefully it's going to change, but nothing yet. If you get an FHA loan, which is a government insured loan, they will not take any income-based repayment plans. So sometimes you don't have to pay anything on the income-based repayment. FHA will not accept that. FHA will only accept what the credit report states as your monthly payment, or if you don't have any monthly payments, then FHA takes half of whatever the outstanding debt is and figures half of that is what your monthly payment will be. At a conventional, there's I can tell you the two different ones. So conventional, Fannie Mae and Freddie Mac, they will accept income-based repayment. So if you have an income-based repayment and and it says 0, they will accept that. And I know right now, COVID, I think they were supposed to take it out, that repayments starting on student loan, but I don't know if they extended it or not. So everybody's student loan says it's in forbearance. It doesn't matter. We still take 1% If you're not in income-based, and if you're deferred, conventional takes 1% of the principal balance for a monthly payment.
Thank you. We do have another question from Miss Charlotte. Is it different if you receive disability?
Nope, disability, we accept disability, SSI income, and with Social Security and SSI, if you're going conventional, we can round up that income by 125%. So that helps you to qualify for even more.
Beautiful. Thank you. We
Mhm.
also have another question from by Ms. Winters. Any programs for teachers?
Teacher programs, I don't have any teacher programs at the bank currently, no. We do have the program for City of Chicago. You have to buy in designated areas for Chicago, policemen, firefighters, EMT, and certain city workers. It's a $30,000 grant, but you have to buy in designated areas for that $30,000.
Thank you so much. We have another question from Ms. Payne, which is, if you're a first-time home buyer, can you buy a building?
Okay, so first-time home buyers, the programs that we have are for single-family homes and for 2 units where you need minimum down. So minimum down on a single family is 3%. Minimum down on a 2-unit, the program we have is 5%. If you buy a 3 or 4 unit building, the only way to go with minimum down would be FHA. And you can buy a 1 to 4 unit building on FHA with 3.5% down payment. You do have to show in the bank, if you buy a 3 or 4 unit under FHA, you have to show 3 months of the PITI, principal and interest, tax and insurance, in the bank that you have that in reserve. And that cannot be gifted to you. So if that monthly payment on a 4 unit is $2,000 a month, you have to show $6,000 in reserve for the PITI, for the principal and interest, tax and insurance.
Thank you so much. And the next question from Ms. Princess, which is, what about settlements on your credit? Does it hinder the home buying process? If so, what are some solutions?
No, that you settled for half or less than what is owed? Nope. Nope. As long as they're older. So if they're new and they just went on, it's going to affect your credit. But a lot of those are like 2, 3, 4 years old. It affected your credit when it went on, because your credit changes every 30 days. Your score changes. So the rule of thumb is you shouldn't owe more on a credit card more than 30%. If you go higher, your score is going to drop. And people think, okay, I use just one credit card and you might charge $500 every month and pay it off. It's never going to show that it's a zero balance on your credit, no matter what time we pull the credit, what time of the month we pull the credit, because it's a rolling and you pay it off every month. And like I said, every 30 days, your credit gets updated. So if you have one credit card that you use the most and you're almost to the limit, but you have other cards, what I would do is I would start using the other cards and not the one that you have, so your credit will increase. Also, you can call your creditors. Here's another trick of the trade. Let's say you have a Capital One credit card and you haven't got a credit line increase, because sometimes Capital One, if you pay off the credit card, they automatically send you, oh, we're happy to tell you we just raised your credit amount. What I would do is I would call them, because if you owe $1,000 and your limit is $2,000, you're at 50%, and we want to boost your credit score. So if you call Capital One and say, hey, I've never had a credit increase, could you increase my credit by another $1,000? But you have to ask ahead of time, do you do a credit pull? Because if you're in the process of buying a home, you don't want anybody to pull your credit. Nobody. If they say no, let us review it. Right then and there, when you're on the phone with them, they'll tell you yes or no if they'll do it, and they do it right away. So if they increase your score or your amount to now another 1,000, now your score is going to go up, because now you owe 1,000 and the limit is 3,000. Your score is going to go up. You can do that on all your credit cards if you haven't gotten an increase, but make sure you ask the creditor if they run a credit. If they run a credit, don't do it.
I'm so glad you repeated that part because we all have selective memory for some reason. And we'll be all, hey, can you do an increase for me? Sure it can. And you get a hard credit pull ASAP.
Right.
So I appreciate that.
Mm-hmm.
Yes, we do have another question. Thank you so much for answering those questions. The question is from Ms. Patterson. What about Cook County workers?
The Cook County workers, that's the, we have that 30,000. The city of Chicago has a $30,000 grant. You have to keep the property for 10 years. And they're very strict, I heard, very strict about you living in that property also. But it's 30,000. It's forgivable after 10 years. Again, it's certain designated areas. We have the maps of the areas.
Thank you so much. And we have another question from Ms. Donna. Is there a minimum age?
To get a mortgage? As long as you have a job and you're 18 and older, because we can't give you a mortgage if you're in high school. So you have to have a job, a full-time job, to qualify. But we can't discriminate on age. But like I said, if you're still in high school, how are you going to buy a property? You're going to school, not working.
Thank you. And I have another question from Ms. Donna. Can you explain more about self-employment qualifications?
Okay, so self-employment. Sometimes people are self-employed and they file, it's called a Schedule C, where they're the sole proprietor. You might have a business at home and you work out of your house, whatever that you do. And we need to show 2 years of being self-employed in that same business. 2 years. Or you're an Uber driver. If you drive for Uber, we need to show 2 years that you have been an Uber driver, and that then we ask for the current profit and loss or an income and expense showing what you've made so far. So say you were Uber driver for 2 years and this year you're still the Uber driver. We're going to ask your accountant to give us from January through whenever you sign the contract an income and expense of how much you brought in and what your expenses were, because we take the net figure, not gross, and we average it for the last 2 years on self-employed income.
Thank you. We have a question from Ms. Howard, which is, how many years do you have to live in the home?
Oh, at least 1 year when you sign the paperwork that it's owner occupied, 1 year. So don't buy a property, move in, and this is how you get caught, because the bank could ask the loan to be repaid. They could call for you to repay it right away. You move in, you close, and then the bank gets a notification because you changed the homeowner's insurance and you have a different mailing address. You're going to get caught because the insurance from homeowner to non-homeowner to an investment is a different insurance. So you're not going to have homeowner's insurance and somebody else living in your house. If you moved out, you would have to get renter's insurance.
Wow, thank you. Also, we have a question from Ms. Miller. Do we have to bank with Associated Bank to qualify or apply for the available grants?
No, but I have to have a certain quota of new accounts. No, you don't. You don't have to bank with Associated, not at all. Nope. No.
Okay, we have it looks like a comment, which is I have a 20 plus year experience. Well, excuse me, 20 plus year job, but I want to own. How would it affect student loans?
So the student loans, again, with student loans, if you don't have a payment that's on your credit report and you're not paying, then we take on a conventional mortgage, we take 1% of the principal balance as what your monthly payment would be to qualify you. That's on conventional. unless you have a letter that states that you're income based and whatever the payment is on that letter for income based, we will accept that. If you have to go FHA on the mortgage, then we will take they do not accept income based. And whatever the principal amount is owed on the student loan debt, FHA takes half of that, and that is figured as your monthly payment.
Thank you. And for people who are entrepreneurs and say they employ their children and they're now 18 years old, can they use that 1099 from being employed with their parents to buy a home?
Yeah, but they have to file tax returns with they'd have to file the tax as long as they're filing tax returns for 2 years. Yes.
A lot of people are asking for your information, by the way, Ms. Deborah. They really want to get in contact with you.
Okay. Do you have, also, do you have those flyers? You know, the flyers do you have any flyers that have any of the information? I can put my information in here too.
Okay, thank you.
I have a question.
Yes.
So say if someone's on Section 8 and they wanted to rent to own a home, how would that work?
So on the because I do all the loans with CHA Choose to Own. I'm on that list. So you have to go through the class. You have to contact Jimmy Stewart or Charnice with the Choose to Own program. She usually has classes every Thursday morning, and you contact them and they will, they'll have you go through the class and tell you if you're ready to purchase or not. And then they'll send you there's 2 non-for-profits that they use that you have to use. They'll send you through the non-for-profit, and yeah, you can purchase. We use the voucher, we use it as your income. So whatever amount that they tell you that they're going to give you on that voucher, it goes towards your mortgage payment. We take that as income.
Okay, even though I do work still.
And they'll take we take that, and then we take the income from your job. Do you know who Jimmy Stewart is?
No.
Okay, so I can have you, I
know they said you have to work, your income has to be 35,000 or better to qualify for the program.
Who said that?
When I called down a few years ago.
No, it does not.
Oh,
nope.
Okay.
So I would get in touch with them, but I'll give you my information.
Okay.
Or you can sign up with them with the information. Yes, no, you don't, you do not. You
have
do
to
not
have 35,000 a year.
No.
Do you know what the qualifications is to rent to own with them?
You have to do that home buying class, and then they'll give you all the paperwork, and they'll give you the eligibility of what you can qualify at. And then you have to go through either NHS or YWCA. Those are the two that do the programs for the Choose to Own.
Okay.
Now you're talking city of Chicago, right? Not the suburban.
Right, yeah, Chicago.
Okay, here, I'll type in the comments. Let's see if I have Jimmy's number. I'll type in the comments Jimmy Stewart's number too.
Okay, thank you.
Yeah, you might as well start now because she has classes every Thursday. And because I usually talk at those classes. So yeah, I would do it if I were you.
Okay, that'll be great. Thank you.
We've got 10 minutes left. And if you have any other comments or questions, this is a good time. Ms. Deborah did put our information over here. And thank you, Sean, for also putting her Google information over there as well. We thank you.
Thank you. Let me tell everybody one thing. Don't go on my website and fill out a loan application because it has you hit a box and it automatically runs your credit. Don't do it. Don't fill out an application online because I don't want your credit pulled. That would be a hard pull and we want a soft pull.
Yeah, skin.
Miss Jackie, were you trying to communicate? I think we have another message, Ms. Mubbo, from Ms. Carrie Patterson.
Ms. Patterson said, it's actually a comment. She said, you have to have a 640 credit score, 4,000 in the bank, a good credit history, and in good standing with Section 8 to qualify for the Choose to Own program.
Well, you don't need 4,000 in the bank. That might be what you're reading, but no. They tell them $2,000. Yep, I know that. Nicole and I do a lot with Section 8 buyers, a lot.
Miss Deborah, please give me a heads up on your the next time you all go for the classes. I would love to join.
Okay. Okay.
Yeah, because we have quite a few Section 8 that we want to start sending their way.
You do?
Yeah.
Okay, then let's talk. Then let's talk after this because yes, they are. I think last week we probably had, or 2 weeks ago, maybe 35 people in the class. So yeah, they're very. Yeah, let's talk.
Yeah,
yes.
we can promote that and make that a whole initiative all by itself.
Oh, that would be yeah.
Yeah, so we're surely. What I'll do is I'll reach out to you. I'll call you tomorrow. In the office.
Okay.
Yeah.
Perfect.
We're gonna take one or two more questions and then we're gonna wrap it up. Miss Deborah goes to sleep early. That's the only way she stays so beautiful.
Oh, really?
And so bright. She gets that.
I thought you were gonna say because she's so old. Okay, no.
Nah, she get all that.
No,
that
I'm not Geritol yet. Okay.
That's her.
I don't need that Geritol yet.
That's her secret. Is sleep and water. That's all she does. She sleeps and she drinks plenty of water. That's how she looks like she's 22. So
I
we're
like
gonna
wine. Wait, I like martinis, okay? And wine.
I love it.
I want to make sure we acknowledge some people that were on the line. We have Mr. Martin that's here from My Turn to Own, and our very own Nicole Wheatley is on the line.
Woo! Good stuff.
Yes, we do have another one. Hi, Miss Wheatley.
How's everybody doing this wonderful, amazing evening?
We're good. We gotta watch you, Miss Wheatley, because you sneak on. You sneak on and we don't even know you're here. You're so quiet.
Nice and quiet, just listening.
Yes, Miss Deborah, we do have another question. The question is from Ms. Donna. Does the non-for-profit program help with credit repair?
Yes, but I think Don, don't you guys do the credit repair?
Yeah, we do. A lot of things that our goal. Let me tell you how we try to channel. Let me tell everyone how we work together. My Turn to Own really tries to connect with as many people that are in need and put them in our hub, and we pretty much build relationships with like Miss Deborah, Miss Wheatley that specializes in certain areas. However, the reason why we rather you go through our program first is by the time we funnel you through our program, we guarantee that you're ready. So by the time you get to Miss Wheatley or Miss Deborah, it's a smooth transition. What we don't want is everyone to bum rush Miss Wheatley, Miss Deborah, and any of our other partners that we work with. And then they say they have to waste time by saying, oh no, you don't have this, you don't have that, you don't have that, and then send you all the way back through the process again. Now they've taken hours trying to do something that if you would have just went through our free program, you will have the education, you will have the conversations that you need, the questions that you need to be answered, the credit score, the credit pools, all that great stuff. Then we match you and then you transition. So that's pretty much how we try to work a smooth flow. Now, if it's somebody that's once you go through our program and we see at the beginning that you're pretty much ready, we're going to fast track you and shoot you over to Miss Deborah and shoot you over to Miss Wheatley or whomever our other partners are to get you going. But what we don't want to do is put too much unnecessary work for Miss Deborah, because she'll run away from us and never come back. We don't want that.
That's a good one.
So yeah, we do. So please feel free. We would fill out an application with us. We're going to put you through the process of getting you an advocate that's going to go over your budget, your income, also do a soft credit pool, find out what your credit score is. They're going to break down your credit report to let you know what your debt to income ratio, they're going to go through the full process and also help you become certified and put you through the class. So then when you get to that point, then Miss Irons, Miss Humphrey, Miss Mogul, they're going to be able to tell you, hey, you need to work in this area. We're building your credit up a little bit first. These are some tools to help you get there. Or, hey, you're ready to go. And then they're going to shoot you right over. So that's really the importance of being into the My Turner Own program, because we're offering you the resources, but at the same time preparing you so you won't be rejected or go after a loan, someone do a hard pull, knock your credit down even lower than what it was, and you just have to be in a situation where there's a longer wait.
Yes, we do have one more question, and thank you, Mr. Davis, for all of that great information. We do have one more question from the Chef Lee, which is, can you pull money from your mortgage and use it to buy a food truck?
You mean refinance your house and do a cash out refi, or get a line of credit against your house? You can get a line of credit if you have enough equity, which would be better, but that's a very dangerous thing to do. I would do a line of credit against the house as opposed to refinancing and taking the cash out of the house. You don't want to lose your house for a food truck if it doesn't work out.
Hey, question for you too. Do you have to pay taxes when you get a line of credit on the money? I know you have to do it if you do, once you refinance and do a cash.
What do you mean pay taxes? No, it's interest. You can do the line of credit where it's interest only. So so let's just say, and the higher the credit line that you get, the less that the interest is. It's usually tied to prime rate. It's like 1 over prime. So interest only, say you took $100,000 line of credit and you only use 20, you're only going to pay interest on the 20,000. That's it. And they give you a checkbook. So you write a check. It's almost like a credit card. So you can have the money sitting there.
Got you. Okay. That sounds great. Okay. And I do have another question. When you do the once you do pull the equity out of your property, is there a great amount of taxes let's say if you get you pull out 100,000, what does taxes look like on that?
Oh, I honestly, I don't know. Like what you would have to pay on your taxes when you file them.
Yeah, because I see, is it better? Because I have seen people do 1031 tax exchanges to get away from paying the taxes off of.
Well, that's when they go from one property to another.
Yeah,
1031 exchange, right?
Yeah, and then they go, but that's another conversation. I'm sorry, that's another. That's another look. I'm asking questions for me now. That's another conversation for another day.
That's for capital gains on properties when you do the 1031. That's for capital gains. Yeah.
Okay.
Lines of credit, you're not paying, what taxes are you paying on lines of credit? There, you might have, what are you gonna pay? Just the interest is gonna show when they give you the 1098 at the end of the year. Yeah.
Yeah, you're right. It's
But
just
you
the
only
interest,
can have
right.
10,000 a year unless, the president changes it, but it's only 10,000 a year.
Wow. Wow. Listen, we can't keep you no longer, Miss Deborah. You did an awesome job as always.
Thank you.
Answering our 10 billion questions in 20 seconds. I'm going to give to Miss Africa. Miss Africa, you can surely close us out.
Thank you so much, everybody. We look forward to seeing you all again next Wednesday. Please go to www.myturnToOwn.org. Please come out with us on our MOAMM. That is our Man on a Mission Mondays. We're at various barbershops around the city. Men are having real conversations around homeownership and everything else too. Good night, everybody.
Good night.
Excellent job, everybody.
Thank you.
Thank you so much, Nicole.
Nicole.
Good night.
Good night, you guys.
Great job tonight, everybody. Have a great night.
Have a great night, everyone. Good night.
Mm.